In this presentation, we will discuss GAAP or Generally Accepted Accounting Principles for non-governmental, not-for-profit organizations, NFPs. In other words, we're talking about not-for-profit organizations. We're talking about those not-for-profits that are non-governmental, not-for-profit organizations, and the GAAP or Generally Accepted Accounting Principles related to them. The Financial Accounting Standards Board, or the FASB, has responsibility for providing guidance on generally accepted accounting principles for nonprofit organizations. So when we're considering who is responsible, in essence, for the guidance related to the accounting principles for nonprofit organizations, we're looking for the FASB, the Financial Accounting Standards Board, the FASB. The Governmental Accounting Standards Board, the GASB, is responsible for governmental nonprofit organizations. So when we think about the nonprofit organizations, we're breaking them out from them being non-governmental, governmental. We here considering non-governmental, therefore looking to the FASB rather than the GASB, the FASB as opposed to the GASB. FASB, Objectives of Financial Reporting for Not-for-Profit Organizations. Now, as we go through these objectives, note these are going to be the overarching type of objectives for FASB with relation to not-for-profit organizations. When you consider the accounting for not-for-profit organizations, you really want to start off with the base point as being similar to a for-profit type of organization. So we want to say, all right, for-profit type of organizations, we have our kind of idea of the for-profit organizations, the objectives of a for-profit organizations. We're going to be using the same double entry accounting system. We're going to be wanting to report something like an income statement, something like a balance sheet. However, then we want to think about when we need to adjust and how we want to adjust or how we must adjust those kind of standard principles to adhere to the fact that the not-for-profit has some differences. And so when you consider the objectives, that's how you want to approach them. That's what I would recommend for approaching them. You start with the baseline of the for-profit type of objectives, accrual accounting, double entry accounting principles, and then think about how those might be modified with not-for-profit types of organizations. As we start to post and record transactions related to not-for-profit organizations, these kind of differences will become more clear. It'll become a lot more transparent, and this is why I really recommend working through problems, because as you work through the problems, you start to see when you record transactions, what is the same, and what's going to be different. And then you can get that foundation principle and then branch out to those things that are going to be different. So making resource allocation decisions, assessing services and ability to provide services, assessing management stewardship and performance, and assessing economic resources, obligations, net resources, and changes in them. So as we go through these, keep this in mind as we go through and start to post transactions, recording actual activity within a not-for-profit organizations. Not-for-profit organization stakeholders could include people such as, these are going to be people involved, people that have some kind of stake in the not-for-profit organization. Obviously, donors. The donors to the organization are the people that believe in the organization. They're putting money into the not-for-profit organization because they believe in what the not-for-profit organization is doing theoretically. We then have members of the not-for-profit organization, consumers of the not-for-profit organization, grantors, which could be another source of funding of the organization as well. Then we have lenders and other resource providers that could be involved. All these people could be involved or have some kind of stake in the not-for-profit organization.